Hi guys, this is Forex Aura and I am back with the video I promised that I would make. So yes, let's get to work. So guys, I said I'm going to be showing you how to actually make yourself $20 or more trading Volatility 75 index. So where can you find this Volatility 75 index? You can find it on a broker called Derive. There are synthetic indices inside Derive. So yeah, just go and research more about Derive, then you'll find out more. So now what I'm bringing is a way for you to make that little cash. All right. So what you will need are just your trend line and your rectangles, right? So the time frames that I will be recommending for you on this is the 1 minute, 5 minute, and 15 minute time frame. So what I'll show you, right? Then you will go and check it out yourself. You know what I'm saying? You'll go and check it out yourself. I'll be using smart money, I'll be using ICT content to actually get this done. So let's go to the 1 minute time frame. 1 minute time frame. There we go. So for instance, this is how you're going to make these dollars, right? For instance, you don't look at much, but just follow the analysis I'm trying to do. It is it. Yeah, good. Check how it went above this high here. And then creating an order block right there, confirmed, right? It goes down, doing what? Breaking the structure here. Okay, that's fine. Check this out. What happens after that? The market hit this, then shoots down, right? So, and also what else lies on this? What else lies is that we have a fair value gap on this right there. You see, let me take it down to this one. That's fantastic. Perfect. All right, can you see? We have a breaking market structure here. Breaking market structure. Change the font. Bold, obviously. This is how I like it. Breaking market structure. And we also have the fair value gap here. Fair value gap, which you could have used to take a trade, right? Look at how the market went down, going down. You could have taken your profits here. You could have taken your profits right there. All right. Or your partials or profits are going to be taken there, or you are going to target this low here, which is that low didn't get taken out. It didn't get taken out. In other words, take it a bit down. Because definitely I was gonna go for the lower one. See, I was gonna go for that. It was not hit, but yeah, I'm trying to show you that you could have got just a significant move with a minimum lot size. You could have made at least $1 to $2, if not $3 here with this move. Remember, it's the 1 minute time frame. And what happens? What happens afterwards? You see the market creating a low, forming a high, coming back down, right? Right here we have an order block, right? We have an order block here, but it was not going to be enough confirmation that the market is gonna move upwards, right? And look at here, the market moved up, coming back, taking out this low here, right? Yes, they're taking out this low here, then rallying up. What I would advise you to focus on more is the break in market structure. I know it's the most basic and everyone knows about it, but it works. It works if used properly. You know what I'm saying? So this is how you're going to make your dollars a day, every day on Derive. And mind you, Derive trades 24/7. So it means there's no day off. You can go 20, no way. You can go for 7 days square with trading if you like. But yeah, so you can just deposit your $5. Minimum deposit starts from $5. You can just deposit $5, right? You can deposit $5. After depositing $5, what are you gonna do? You are going to, okay, I'm making a mistake, so I don't know. You're going to actually do what? Trade the Derive Volatility 75 index on the 1 minute, looking for these setups, mainly your breaking market structure. If you would have entered here via the breaking market structure or via the retracement, right? And also forgot to mention, so this is not just a breaking market structure only, right? Breaking market structure, yes. Retracement, that is a breaker for me, right? I don't know if I'm saying something wrong, but yeah, that is a breaker for me. And the market would have, I would have taken the trade myself, you see. And then what did the market do? Come back here, go up and create a low, go up. This is like the highest high, right? Then comes back, forms a higher low compared to this one here. It's a higher low, right? And then the market moves up. After moving up, breaking the structure, right? Coming back, fair value gap. Here on top, it's also a mitigation block, which is the market hit, then rallied up, right? Came back. There's an order block here, but the order block was not touched by this, it was touched by this one, right? Meaning now there's a propulsion block there, and then the market went into it, rallying up, right? So you could have had your target here, top of this high, or target this one, which is it was not hit. Okay, so this means the market was in a consolidation. Okay, notice how this low was not taken out, and also how this one was not taken out. So if you extend just this a bit, what happens? The market comes back to it, hits it, and rallies up, which is it gives another buying setup right there where it breaks the high, then continues up, rallies back, right, back down. Then there's a smaller fair value gap, there's mitigation here, and the market hits that mitigation, rallies up some more. You understand? So guys, that's what I wanted to share with you. So the way I analyzed is the most important part. The way I analyzed, you understand? You need to take your time, go and look at the volatility 75 index, and I will be making more videos like this. Let me know in the comment section. Don't forget to like, subscribe, and share the video. Also, follow me on my Instagram at Forex Aura, at Forex_Aura, AURA. That's the Aura. Follow me on Instagram, Twitter, and Facebook. Yeah, I'll see you in the next video. Let me know what you want to see next.